This is Debt Free in 30, where every week we talk to industry experts about debt, money, and personal finance. Here's your host, Doug Hoyes.
Today on Debt Free in 30, we're going to talk about a new kind of lender. On previous shows, we've talked about banks that lend to people with very good credit and payday loan companies that often lend to people with less than perfect credit. But there's a new type of lender that has interest rates a bit lower than a payday loan company, but higher than the banks. Who are they and how do they work? Well, that's our subject for today. But first, let's meet our guest. Who are you and what do you do?
I'm Kerry. People call me Squawk Fox because I'm the financial writer and blogger behind Squawk Fox. But my bylines tend to be Kerry K. Taylor because that's what my parents named me. Kerry
K. Taylor is our guest today. SquawkFox.com is her website, which has been around for many, many years. It always is at the top of the rankings when they're voting for best websites and best blogs. And I'll put links to that in the show notes, but it's pretty easy to find, SquawkFox.com. Yeah. Now, I've been following your work for quite a while, and what intrigued me was over the last few months, you've written you've had two things. You had a video that was on Money Sense, and you also had an article in the Globe and Mail a few months ago because you went and checked out a company. Mm-hmm. Tell me the story. Paint the picture. What was the company you checked out?
It's a very sexy company. I was going for a walk, and I walk a lot. And, I tend to walk past all these payday loan stores, the big yellow ones, and they're not very appealing to the eye. But I walked past this one called Mogo, and they have a lounge. And it's really sexy when you go in because they offer different kinds of loans, and they have a lounge, and they give you water, and they have this whole bay of iPads set up, and it was really friendly atmosphere. And I thought, hey, what's going on here? What is this place?
So this is a new form of, I don't know if it's even a payday loan place or what it is. I guess I would call it an alternative lender. Maybe it would fit into the whole fintech description.
Fintech online lender. They've got an app.
And is that what fintech means?
It's a good question. I don't know. They're online. You can do everything online. They use data crunching. They use, online tools in order to get customers to apply for loans.
So, and they've actually got a physical location in Toronto, which is where you and I are sitting down and chatting today.
They're in, their home base is in Vancouver.
But their home base is in Vancouver, and the vast majority of people who deal with them would be dealing with them over the internet, over their phone, whatever.
For sure, yeah.
So walk me through the process then. I either go into their physical location, or more likely I go onto their app, and what happens from there?
Well, it's a good question. They have a really sexy marketing campaign. So you go to their website, it's dark color, and they have all these educational resources that apparently help you improve your credit score. And right there on the front page, you get a free credit score just by creating a 3-minute account.
So this all sounds very good. Free educational resources. This is good. Okay.
Very sexy. If you go into the actual lounge, they'll give you free condoms. So,
free condoms as well.
So it says on the condom, are you getting screwed by the bank?
Oh.
So it's like they want to stick it to the bank. They want to give you the loan if the bank isn't being your friend. So
what kind of loans can I get from these guys?
Well, so you go in, you create an account for 3 minutes. That's all it takes. They give you a free credit score, and based on your score, you can qualify for one of 3 loans. They have a term loan, they have a line of credit, and then they have their payday loan product.
So let's kind of break these down one by one. So their payday loan product, and we've talked many times on this show about payday loans. I'm not a big fan of them. You can give me your opinion shortly. So in Ontario, as we record this in 2016, the maximum a payday loan company can charge is $21 for every 100 borrowed. And there are rules that are supposed to be changing for 2017 to lower that, and the number would be lower in other provinces. What does Mogo charge?
Well, they're very proud of their 50% discount they give over other payday loan lenders. So they charge $10.50 for borrowing $100 over 2 weeks. Which is basically a huge deal when you compare it to other payday loan lenders.
I mean, if I'm paying,
what's the APR on that?
Well, I mean, if $21 on 100 is 546%, and I'm assuming if I get the loan, keep it for 2 weeks, pay it off, and then get another one, I'm paying that same $21 26 times. That'd be 546%. $10.50, if I did that 26 times during the year, would be 273% on an annual basis.
Oh, it's a deal, huh?
So it's a deal. It's a deal. So I guess it's a deal compared to the alternative.
Yeah.
Not so great a deal compared to every other alternative that's out there. So,
exactly.
So that's a Payday loan. Now, you also said they had a line of credit product.
Yes. I think they call it Mogo Liquid. And that's, you can borrow, I think that APR on that one is like 47.7%.
Yeah, and this is where I'm a bit confused. So in your article, you're talking about, based on your research, you can borrow on this line of credit anywhere from $5,000 to $35,000.
I think that's their term loan.
That's their term loan. Okay.
Yeah, that's the one with the teaser
let's
rate of like 5.9% interest rate. So that's like the deal. That's the one everyone wants to get.
So the term loan, tell me about that then. It's like literally it's a term loan.
Yeah.
So you have a year or two to pay it off, that kind of thing?
Yeah, that's the one everyone wants because it's got the lowest interest rate on it. But the problem is based on your credit score and the amount of income you make, what Mogo does is they have all of these data crunching algorithms on the back end that look at the kind of prospective client that you're going to be as a borrower. And based on your inputs and your credit score that they now have 100% access to and all the information on it, they're going to know the line of best fit of what to lend you and what you can pay back in a reasonable amount of time and how much maximum money they can make off you as a borrower. So they're going to give you the loan that best suits.
So in terms of process,
based on
then,
the numbers, yeah.
I don't go in to get a Payday loan.
No. No one wants to do that.
No, of course not. So I go on the app, and what kind of things is it asking me? How much do I want to borrow? Is that one of the questions? Or do they tell me how much I can borrow?
They tell you how much you can borrow.
So they ask me for my name, obviously. So
they want to know your income. They want to know what you do. They want to know if you make regular income. Then they're going to look at your amount of credit you have and how much debt you have.
And based on that, they're going to say, oh, you qualify for A, B, or C.
Exactly.
And here's how much you can get. Now, you mentioned
it's a 3-minute process.
3 minutes.
It basically takes 3 minutes for you to get access to money.
Wow. And I'm quite intrigued by this whole credit score thing.
Yeah.
So I sign up for an account, and now I can get my credit score whenever I want. Mm-hmm. That sounds pretty good.
Well, you can do that at Equifax too, right? It costs $25, but I don't know. I feel really unhappy with telling people to get a free credit score at Mogo because they're going to have access to your data. I would prefer people to pay the $25 for the actual score or to go online and order your report for free so you can check for errors.
Yeah, you can get a free credit report from Equifax and TransUnion once a year.
Yeah.
Mail in, you get it. Now, you don't get your credit score with that.
No, you
and
don't.
we can talk about credit scores in a minute. But you're right. They, Equifax and TransUnion both have services that you can pay for and get, your credit score however you want. So you said that they have access to your data then.
Yeah.
Why should I be concerned that they have access to my data? Because the way you're describing this is a data play on their part. They're getting a bunch of data. They're offering me free access to my credit report with my credit score. But because I've got it, now they have it.
Data's powerful out there. Everyone wants access to data. I mean, a lot of the time when something is free, it's because you are, the free lunch, right?
There is no such thing as free.
Yeah. You got to look at what the value proposition is for them.
Okay, so let's think this through here. Yeah. So you and I are going to start a fintech company, okay? And it's going to be on people's iPods and iPhones and whatever.
Right. We'll have an app.
It will have, that's right. We're going to have an app. And
it'll take 3 minutes
to log in and get all this stuff. So, and we're going to make it as cheap and inexpensive as we can.
Right.
So how are we going to be able to use people's data to make money? What's the angle here? How is this data valuable?
Well, it's exceptionally valuable because now they know, based on all the different credit reports that they're collecting and scores, they know the kind of client that they're dealing with from top to bottom, right? So they're going to understand how much debt people have, how much ability they have to pay it off, and, and align the loan that they want to give you for the best ability for that customer to make the most money off of them, quite frankly.
So they can target very specifically.
Business. Yeah, they can target very specifically and know exactly how much how much debt to offer you, right? So they're going to give you just a long enough rope that, you can creep the noose to almost,
I hear what you're saying.
To almost dangle from it.
So they have 3 different products. We crunch the numbers, which all happens very quickly if the approval process takes 3 minutes, and they slot me right in the product where they're going to make the most money off me.
Probably, yeah.
And presumably have the lowest risk.
Or have like the product that you're most likely to accept. So they're also going to have the acceptance rates as well for that specific profile of that customer with that level of debt in need of infusion.
And so the more customers they have, the better, because the more data they have.
Well, exactly.
So when I log into the app and punch in my information, they go, oh, we've got 73 other customers almost exactly like this guy.
Yeah.
Here's the product that he's most likely going to pick. Here's the product we can make the most money off of. Let's target specifically to him.
Yeah, I would, wouldn't you? I mean,
absolutely. Well,
that makes the best sense
this
to
company
me.
we've just started, I guess that's how we're going to do it. So how is this different than banks? Like, banks make money off people. Banks have access to data, don't they? What's the difference? Why are we vilifying these poor little guys who are starting a new business? Isn't this just the same as what the banks do?
Well, sure. I guess yes and no, right? I mean, banks definitely make money off of credit products. I've yet to go into the bank and have the teller not tell me I've had an increase in my line of credit. I don't have a line of credit, or an increase in my credit card rate, or they've offered me another credit product, right? So, I mean, that's key bread and butter for them. But banks have a lot of stringencies that they go through in order to lend you money, right? And their rates are much lower than what Mogo offers as well. So, I mean, a 47.7% APR is really steep on a line of credit, don't you think?
Yeah, I think so. Because at a bank, if you've got good credit, then that rate might be 4, 5, 6, 7%.
So Mogo's really going after the customer that the banks no longer want to deal with because, they're not their customer base.
So the bank wants people that there's very low risk of ever losing money. Right. Mogo and I guess these other alternate lenders are willing to be a little more risky. Yeah. Which is why the interest rates are that much higher.
Well, and they're also targeting people that have a lot of debt. So the word that they're using is to deleverage their credit card debt and consumer debt with a lower interest loan. And that's really what they're looking at. So when I interviewed Mogo, all their clients basically have credit card debt of some sort. So rather than find another way to pay off the credit card debt, they're taking on loans to service that debt.
So did they actually admit to you that most of their clients have other debt?
No, for sure. Yeah.
Wow.
That's their client base.
Wow. And
they're looking to, pay off debt with more debt.
And so
it's this cycle, right?
Yeah, so they're trying to get you on the hamster wheel. So but given the interest rates that you're talking about, in most cases this doesn't make any sense.
No, but it's working. I mean, cuz when you're, I guess debt's really embarrassing, right? Like, where do you go? What do you do if you can't make the minimum payments and you've got creditors breathing down your neck? Well, you go out and find a loan, right? And isn't that what their payday loan people are doing? Will you tell me you deal with payday loan ramifications all the time? Yeah,
and we know from our client base that people who have payday loans is exactly what you just said. They have a bunch of other debt as well. So everyone,
paint me a picture.
Every one of our clients doesn't have a payday loan, but of the ones that do, by the time they end up coming to see us to file a proposal or go bankrupt, they have 3.5 of them.
So why did they layer on all these loans on top of their credit card debt? Because we already know that credit card debt is about 19% and the payday loans are upwards 500%, right?
Well, I think in most cases it was because they did not perceive that they had any other alternative.
Okay.
And to me, that's the saddest part of it. So, a payday loan, I mean, the whole definition of it is, well, it's a loan until your next payday.
Right.
So today is the 30th of the month. My rent is due on the 1st, but I don't get paid until the 6th. So how do I pay my rent? Well, I go and get a payday loan. I can pay my rent. I'll be able to pay it back on the 6th when I get paid. All makes sense, right? Well, no, because if the rate is, even if it's only $10.50 on 100, you're paying back a lot more than you borrowed, which means you're going to have to take out another payday loan to pay off the first one, and the cycle continues. So the solution for most people is to actually break that cycle.
How do you do that?
Well, so my rent is due on the 1st and I'm not going to have it.
Okay.
I guess what I would do is I would go talk to family and friends, see if someone can help me, or I would go talk to the landlord and I'd say, look, I can't give you the money on the 1st. It's my own fault, whatever, but I can't do it until the 6th. Now, of course, the landlord isn't going to be happy, but under most laws in most provinces, they can't evict you for being 5 days late with your rent.
Right.
So in most cases, okay, come up with the rent on the 6th and then make a plan so that you can be getting ahead from there. So, okay, my next paycheck is going to be on the 20th. Well, on the 20th, I'm going to set aside half the month's rent or a full month's rent for the following month and start to try to get ahead.
Right. And it's looking at the alternatives, right? Like one thing that really shocked me when I went into the Mogo Lounge is they don't talk about the alternatives to getting a Mogo loan. Right? There's no alternative. It's like the cheapest loan, payday loan you can get. It's the best deal going, right? And that's how they sell it because it's only $10.50, right?
So even all this financial advice they're giving, it's not real advice then? They're not actually giving you what all these different alternatives are?
Well, they're telling you how to improve your credit score, and that's to pay off the loan, right? So they're teaching you how to use credit and pay back debt in order to game this credit score.
But isn't that like teaching you to be a drug addict?
I don't know.
Like, isn't that the sort of the same concept then? So,
yeah.
I mean, how do you get a high credit score? Well, it's by having lots of credit.
Yeah.
So...
And paying it back.
And paying
it back.
Or
paying most of it. Or the minimum of it.
Well, yeah. I mean, the utilization is one element that factors into your credit score. So you don't want to be utilizing more than, let's say, 20% of your outstanding limits.
Right.
So I got a $10,000 credit card. I carry a balance of $2,000 every month.
Wow. Fantastic.
I've got perfect utilization.
You're awesome.
You're awesome. Right. Except
that you have $2,000 worth of debt you're carrying around.
Right. You're paying all this interest.
Dumb.
It's crazy. So it just doesn't work. So...
I mean, I go in there, I watch the people sign up for these loans, and I get so frustrated because this one woman didn't know the difference between her gross income, her net income. I mean, there's a lot of breakdowns happening here. Mm-hmm. People just don't know how much they make. What are some of the other problems? Like, why do people go to these loans? Because the math does not make sense to me, and I was just so... Well, it's not the free condom they're going in for. Those only cost $1.
No, it can't be that. Well,
I've done the math on those too.
And it's not the math that's driving it; it's the emotion. Right. So, I mean, we have found that the largest payday loan debts are with seniors.
Really?
Which intuitively makes absolutely no sense. If the whole point of a payday loan is to get me to the next payday, by the time you're a senior, you're probably getting a pension, so it's not a traditional payday anyways. But the age 60 years and over crowd, if they have payday loans when they go bankrupt, owe more on those payday loans than any other age group.
What's going on?
I think it's partly a fixed income issue. Mm-hmm. So I was used to living on this much, and then I've retired, and now my income is lower, but I'm still spending as much as I was spending before. Right. So I start to get short every month. How do I make up the difference? Well, a payday loan.
Right.
I think the other aspect of it is embarrassment. Mm-hmm. If I'm 60 or 65 years old, I've been the adult my whole life, and my kids who perhaps are adults now come to me and ask for some help. Hey, I'm going through a situation. Can you help me out? I don't want to say to my adult children, no, I can't help you, because I've always been the parent. Right. Once a parent, always a parent.
Well, I'm a parent and I say no to my 4-year-old all the time.
But will you be saying no to your 4-year-old when she's 40?
I don't know.
Who knows, right? Because you've never been in that situation.
My clairvoyance is lacking.
It's hard. You do not have a crystal ball to tell. But I think that's part of it, that I don't want to have to admit to my children.
But you're warning me pretty well.
I'm telling you, 40 years from now.
Yeah. So 60 plus, there have, I've read through some of your data points. You say around $2,800 worth of payday loans that, people with about $60,000 worth of debt tend to carry.
Yeah, our typical client has $60,000 of unsecured debt. So we're not talking mortgages or car loans. And the over 60 people, at the time they go bankrupt, if they had a payday loan, would owe almost $3,700. So as compared to, let's say, the 50 to 59s, they're more like 2,800. The same with the 40 to 49s. I mean, most other age groups are in that sort of $2,800 level, which is still a massive number.
Yeah.
I mean, $2,800 if you're paying $21 on 100 every 2 weeks.
I feel like it's loan sharking.
It is. But they're good enough that they keep it just below the limit.
Right.
So I mean, the usury laws in Canada say you can't charge more than 60% a year, but there are special exemptions for the payday lenders.
Why do they get special exemptions?
Good lobbyists? I don't know. Part of it's because most of them are regulated provincially, not federally. Mm-hmm. And the other part of it is the way the rules are written. Well, the loan is getting paid back, so the annual interest rate isn't as applicable.
Okay.
But ultimately, it comes down to, I think, to answer your question, it's an emotional response to the problem. And that's what you saw when you went to visit Mogo. Mm-hmm. They are trying to make debt fun.
Oh, it's a huge party over there. They have events, they have chefs come in, they have, beauty seminars. It's like a place where you want to hang out and just talk about shopping, I guess. And
so it's
debt. I don't see a lot of concern over the amount of debt people are carrying. I just see ways, I guess, to game it.
So I'm trying to figure out the difference between them and the banks then. So it's sexy, and it's fun.
And it's attainable and easy because there's just an app that it just takes minutes. You don't have to go in and make an appointment with a banker. You don't have to bring all your paperwork with you. You sit down on a friendly iPad. Someone's nice. They give you a glass of water, a couple condoms, and they chat you up.
Bing, bang, boom.
And they make you feel good. Like you don't feel like someone that needs something. They're there to help, right? They have courses online. They've got, resources. The people online are attractive. The site is fun. It's a real draw.
And that's how
and they're really targeting all the millennials, I guess. Like their courses are called Adulting 101, and they're targeting this cohort that, is looking to pay off perhaps school debt, or they've shop too much. They've got credit card debt. They're trying to move out of mom and dad's home. Those are the people they're targeting. But I don't know if those are the people signing up for the stuff. Like, it really seems to me that when I was in there, it was people more in their 40s.
And I guess that's the way many products work, right? If you watch a beer ad on TV, it's they're all 25-year-olds, but there are people older than 25, I assume, who drink beer. Explain to me the concept of leveling up.
Leveling up. This is apparently a gamer concept. A friend of mine who builds games for a living explained this to me. So basically, if you get their entry level loan, which is, I guess, their payday loan, you pay it off, for instance, and you consistently borrow and pay it off, and you've done well, and you've done that a couple times, they will level you up to their line of credit. So now you're getting access to longer term money, at hopefully a better rate. So the idea is they give you the carrot, and if you do well with it, they'll give you, a shinier carrot the next time.
Wow.
So, you're working on being better at borrowing. So
I borrowed the $500 and paid it back. So the next time I go to the app, it might say, hey, you now qualify for the $2,000 term loan or something like that.
For sure, with the 47.7.
With the 40, they don't.
Which is better than which is a deal considering like the 273 APR.
Yeah, and I guess if you and so they're selling that by saying, and this will make your credit score go up. Well, is that part of it?
I think that's part of it. And the other part of it is you're getting access to more money at a better rate. So,
and so they just keep you going. And
they keep you going.
And I want to make it clear that the reason we're talking about Mogo is because you actually went in there, you interviewed them.
I interviewed them. For sure.
But there are lots of other companies out there that are in the same boat.
Yeah.
And, my opinion as well, they're probably all, basically the same.
It's this whole new, I guess, competitive stream to the banks that's opening up. Everyone is like, okay, down with the banks. There are 5 of them. They're greedy. We can be, the underlings, the little guys that are there for the consumer. We can service the people that aren't being, brought in with the banks. We're friendly. We're different. We're fun. We have tools online. So that's the kind of customer base they're looking for. An alternative to the bank, really. And some of them want to be banks, too.
They refer to you as members.
Yeah.
So, which I guess...
You're part of a group.
Well, Costco does the same thing, right? Yeah. You're not a customer, you're a member. You've got a membership card, I mean, there's got to be some psychology there to.
I love Costco. Come on, $2 for an ice cream. It's the biggest
we
ice
will
cream
not
ever.
We will not trash Costco then at all. So, okay, let's talk about practical advice here then. What are some takeaways that we can give people?
Yeah,
So
what do you
whether
do?
you're a millennial or not.
Yeah. Well, you tell me, because, you know, when you go into these firms, companies, they don't give you any alternatives other than being better at managing your debt loads to get a better rate, right? They're not giving you ways to actually deal with the issue that's getting you the loan in the first place. Would that not be consumer debt, Doug?
Yes, that would be. And I mean, I'm a big fan of treating the problem, not the symptom.
Right.
And so if I'm going to a payday loan place,
That's a symptom.
well, yeah, the symptom is my rent is due in 3 days and I don't have the money.
Right.
The actual problem is deeper than that.
Yeah.
Your income isn't high enough. You're spending too much money. You've gone through some other crisis. There's some kind of issue. So I think number one, you want to drill down to what the real problem is. Mm-hmm. I think number two, you want to actually crunch some numbers.
What can be the real problem that you've seen come in?
Well, I mean, it could be
consumer debt, overspending.
Yeah, I mean, it could be as simple as overspending. When we look at the people who end up going bankrupt or doing a proposal with us, there's a significant amount of job loss. Mm-hmm. Or job reduction. You know, I'm not getting as many hours, so I'm now working part-time instead of full-time. Medical issues are a big thing. Mm-hmm. We all think in Canada, well, medical care is free, you know, it doesn't cost anything. Well, that's true. If you need to have your heart operated on, you're not going to have to pay for it. But if you're off work for 6 months, you're not getting paid. If you have to buy medication, you're not getting paid.
Right.
So if you lose your job because of that, it's an issue. And then another big one would be relationship breakups.
So divorce.
Divorce is a huge one. And again, it makes perfect sense financially that if there are two people paying one rent and now there's two people paying two rent.
And there's kids.
And there's kids and your incomes don't go up when you get divorced, but your expenses do. So these become pressure points. So you have to kind of look ahead to see what's coming so that you can anticipate it.
And these are really normal things to happen. People lose their job all the time. People get sick all the time, and relationships don't always last forever. So really anyone can be in this boat and not feel like they're,
absolutely.
That they've bought a ticket for that cruise because, they could be divorced in a year.
Yeah, absolutely.
Right? Or get sick or whatever.
Sure. And when I look at my clients, they are literally, 20 years old all the way through to 80 years old. It's there was no specific thing, but starting to crunch the numbers, I think is a great starting point. So at least you understand what you're looking at. I mean, on your site, you've got some budgeting resources there, right?
Yeah, really simple stuff to get people started and seeing, maybe where some of the leaks in their finances are. And
so what stuff do you have on there? You've got worksheets, tell me what's there. If I've never actually kept track of money,
right.
What does your site have?
So I have basically a budgeting spreadsheet. Sounds really simple and boring. And you know what? It's really simple and it's really eye-opening, because once you start tracking your spending and you see what you're spending your money on, it's much easier to, stop the leak because you see it, right? You can acknowledge it. It's there. The math is in your face. So there's all different, areas in your life that you can document. So there's obviously your rent, your mortgage, your big expenses, your repeatable expenses, like all your different bills. I highlight certain things that you might forget about, your life insurance policy, all these gotchas that seem to surprise people every year, but it's like, heck,
well, anything
you've got to pay your property tax.
Anything you don't pay every month is easy to forget because they're not ongoing types of things.
Yeah. So repeatable expenses, yearly expenses. I mean, these are all the things that I want to get people to think about. Even your bank fees. I mean, is banking fees, some people pay $40 a month. They don't even realize it.
Wow.
So that's, another area where people can, document and figure out where the money's going. But yeah, so crunching the numbers is big.
And then,
what else?
And then at least you've got a starting point. And I think the other point would be to realize that there are many other alternatives. Mm-hmm. So we talked about, my rent is due. I mean, hydro is another big one that people say, well, my hydro bill's due and I don't have the money, so I go and get a payday loan to play.
Have you seen the hydro bills
Well,
lately?
they're crazy.
Gosh,
and so I think
off the chart.
if we could figure out a way not to use hydro, at least in this province, we'd be better off. But again, being 4 days late with your hydro bill, they're not going to shut your hydro off.
Right.
And now, if you're 6 months late, sure, but if you actually get on the phone with hydro and say, look, here's my situation, I can send you this much on these days, and here's what I'm going to do, and there are alternatives to rushing out and getting the highest cost loan.
So money management, I guess, is a skill set that people need, especially if they're sick or all these different variables that can pop up. But everyone needs to have good money management skills, no?
Right.
I mean, where do you? So if you're in debt all the time, this is obviously something you need to work on.
Right. And if the underlying problem is that there were money management issues, great, get those solved, use the budget worksheets, whatever. Mm-hmm. But even at that, you still have all this debt.
Yeah.
And so, like I said, the average person I'm dealing with has $60,000 worth of unsecured debt.
And what are the payments on that? Like that must be,
if it's
flattening you right there.
Yeah, if it's credit cards that you've got, then you can't afford to pay it back if you've got a conventional job where you're making $2,000 or $3,000 a month. Okay. So in that case, obviously the big problem then becomes the debt itself, and that's where you've got to look at options like consolidating or refinancing if that's possible. If you've got a house that's gone way up in value and you've got lots of equity, great. Refinance the mortgage, pay off the high interest rate debt with a lower interest rate mortgage and live to fight another day. Mm-hmm. In some cases, credit counseling makes sense. If your debts are relatively modest, then they may be able to work out a plan.
Like a debt repayment plan?
Yeah, a debt management plan. If the debts are $60,000, then something more like a consumer proposal or a bankruptcy becomes necessary.
Right.
And
a consumer proposal is?
It's payments over time.
Right.
So the typical proposal we would do for someone with $60,000 in debt, they might end up paying back, let's say, $20,000. And it depends on a bunch of different factors, your income, your assets, which creditors are involved. But, so you might end up paying $400 a month for 50 months, $350 a month for 60 months, something like that. But that wipes out the debt. There's no further interest.
Right.
So you're much better off paying back $20,000 rather than trying to pay back $60,000 over 5 years, which is going to cost you $120,000 with all the interest. I mean, it's just impossible.
Yeah.
And a lot of people say, oh, but if I do that, my credit score is going to be lousy.
Okay. But the thing is, what do we all need these credit scores for? Like it seems like we're all trying to game this thing. I only care about my credit score when I need a house.
Yeah, exactly.
I rented an apartment in Toronto. I needed a good credit score for that.
Yeah, well, and even to sign up maybe for hydro or a cell phone or something.
Oh,
but
okay. Yeah.
But if you've got $60,000 worth of debt in my example,
then that's a bigger problem than a low credit score, I would think.
So let's focus on the important things. And by dealing with all that debt, you will ultimately have a better credit score because you wiped out all the debt.
Right. That makes sense.
And whereas if you have all this debt and you just keep getting farther and farther behind, well, your credit score is going to erode anyway.
Shot anyway because you keep going back for more payday loans.
Absolutely, which is not good.
Not good at all.
Well, so that's quite interesting. I'm glad you were here today as someone who actually went in and sort of poked around and investigated them.
I sat there for a good long time. It was free water the whole time.
It was a fun day for you. So, are there any other thoughts that pop into your mind as we close here then on payday loans or debt in general? I mean, what are the other big takeaways that you saw from your time there?
I think it was just really eye-opening who was getting the loans. It wasn't as it seemed. It wasn't, people, the millennials that they were targeting at all. It was just average people, again, that had a bad string of luck, didn't have exceptional money management skills, people that were really embarrassed about asking for help elsewhere and didn't know where else to turn. And I think opening up people's eyes that there's different avenues to solving debt problems. And there's usually a great solution for wherever you are, how much debt you have, how many assets you have, and learning to ask those questions and not be afraid to be a better informed consumer on your debt, to get out of debt. And I think that's the takeaway for me. It's like, don't go with these loans. Look at the problem underneath that's causing you to need to borrow more.
Yeah, treat the cause, not the symptom.
Yeah.
Yeah, because there certainly are other options. So, well, that's great. I really appreciate that. So what we're going to do in the show notes, which will be over at hoys.com, is I'll put a link to squawkfox.com. We'll put up a link to the Money Sense video that you did and the Globe and Mail article that
it's a fun read. People really enjoyed reading it. I did it with a sense of humor because
well, and the video itself is only a couple minutes long.
Yeah.
It
was fun.
But it certainly gives the big picture on it, which is I think great.
And I throw money around and wave condoms.
Oh yeah, there's all sorts of littering going on. So you definitely want to see that. Money and condoms all over the place. Kerry, thanks very much for being here.
Thank you so much.
That was my conversation with Kerry Taylor. You can find her on squawkfox.com. That's SQUAWK, Squawk Fox, F-O-X, squawkfox.com, which was voted Canada's best money blog by the Globe and Mail in 2010. And in 2014, Chatelaine said she was the gold standard for personal finance blogging. Full show notes, including links to Kerry's website, her videos, and her free personal budgeting spreadsheet can be found at hoys.com. That's HOYES.com. Thanks for listening. Until next week, I'm Doug Hoyes. That was Debt Free in 30.
Thanks for listening. That was Debt Free in 30.